Hello everybody, this is Jamie's last trade log submitted to me for the week. And let's have a look at it. So we can see that he took, 9 trades, 9 Forex trades, non-futures. Well, it doesn't mean that there were no opportunities in futures, right? I mean, it was just like he was busy enough with trading the Forex market and he didn't need to look out for more opportunities. So it's always good to have much more opportunities than you actually need. So it was another great week, right? 21 hours for the week. And let's have a look here. So that's the 1 minute, 1 minute chart, S2 long, cat yen. So that goes in line with the top-down analysis, right? Cat strength and yen weakness. So the weakest pair against the strongest pair, well, that delivers a strong trend. And whenever the charts are trending strongly, well, that basically means that the ATR, that an average bar increases in size, right? If there's a strong trend. Well, if the 1 minute bar increases in size, well, then the 1 minute chart becomes tradable, right? Because the spread, well, let's say the spread is 2 pip. Well, if the ATR grows from 5 to 10, well, that's a big difference, right? So when there's a strong trending chart, well, that allows you to trade lower time frames, and the spread is not an issue anymore. Now let's have a look here. S2 long. So this is it, right? That's a plain vanilla S2. The stop goes down here. This is an oval sideways. Well, it can be a negative and a positive, right? We have the zigzag, but it's an oval sideways. Well, actually, this S2 is a pattern within a pattern, right? This S1 has already triggered. It's well on its way. There's a huge stop run opportunity here. So basically, this S2 is going for this stop run of this S2. So sorry, of this S1. So this is an S1, but just remember, well, we've got another S1 here. I think that's the daily chart. It's basically a pattern, an S2 within an S1 within an S1. Now let's see if he was able to, well, if prices were able to run for this stop run. No, it was not, right? Still a great R result. It didn't even get there. Still a great R result. So that's well done. All right, so Euro odd as another 1 minute, S2 long, Euro against Aussie, okay, S2. So this is the S2. It's a bit difficult to see, but that's 1 touch, 2, and that's 3 touches. Well, there needs to be more to that, right, than just the pattern. So let's have a look. Well, we can actually shoot here for the 200. That's a 200 potential 200 spike. This is the stop run level. Well, here we're basically trading against TC3 trend, so that's a negative. Well, let's see what happened here. Well, it's shooting for the 200, right? So the 200 is a magnet. Well, that's a positive. Well, that was a negative, right? So it's always a trade-off, and it's in the end, if there's a trade-off, right, between positives and negatives, well, it's a discretionary decision. You have to evaluate the pros and the cons. Right, another 1 minute, S1, Euro New Zealand. So we have odd and Kiwi strength, right? So that's a 1 minute S1. Let's have a look at that. Okay, let's take it more on a discretionary basis. It's a bit difficult to see, but I can see there's at least 1 touch and there's another touch. Now the breakout is a bit, so the stop is a bit wide, right? Well, let's see. Well, we have been struggling here, playing around with the 200, right? And well, this very much seems to me like there's free fall territory, right? The struggle has happened, and the bears have won over the 200. I cannot see this one, but this looks like a great chart, right? For prices to go lower. This is a momentum move. This is a pullback to 200. So now we've got a confirmation that we are below, south of 200. And now it could actually go down to here, to this next level, if we put a momentum move 100% here. Okay, this is what we had spotted before, right? That this has a lot of short potential. So we're basically in line with the higher time frames. Now let's see what happened here. Okay, well, this got stopped out now with a good R winner, and we've just basically tested the prior low, right? So that was a nice quick quick our winner. Let's have a look at, okay, now that's a 240 minute S2 long, Swiss yen against, right? Swiss strength, yen weakness. It's the theme of the week or the last weeks. Okay, 240, that's a 240, that's a pattern. It's a little bit wide, the stop, right? I mean, this is a momentum move. It's not too wide in terms of reward to risk. It's a bit wide in terms of the pattern because it has to break to a new high, right, to make it break even. But there are nice stop run levels here. Like if it breaks the consolidation high, then most probably it will run for these stops and break this high too, right? Now let's see, what else is there? I mean, what else is there? Well, this is an S1, right? And we had spotted that before. We've got a couple of S1 patterns on the daily chart for the yen pairs. Now this has already triggered an entry. Basically the line is here. This has triggered an entry. We are pulling back. We are pulling back. We have touched the 200. We are nicely testing here, right? The 21, nice uptrend. So we get a lot of confirmation from the higher time frames. And that's basically that's basically with this S1, he's getting into this S1 without needing to put a stop down here. The stop goes here, right? So it's basically trading the day, but it's taken on discretion because this is not trending. TC1 is not trending, right? However, there's an S1 pattern. So Jamie overrides the trend rule because there's an S1 pattern that provides a long bias, right? And this allows him basically to trade, well, it's basically trading the daily chart, right? Entering the daily chart based on a tighter on a tighter stop than down here, and using an excuse. Well, this is basically the S1 pattern, right? Using this S1 pattern to trade the daily S1 with a tight stop, and the stop is nicely protected behind the 200. So you see, this is the type of discretion you want to look out for. Discretion that makes sense, and discretion that might override the rules, like this one, but with some logic and discretion behind it, right? Logic behind it, and we can nicely see, okay, it's running the S1 pattern and having a tight stop. Or you can see what happens. Well, that's what happened actually, right? So once the consolidation high was not easy to break, it took 3 attempts, right? So once this happened, well, then we see a big stop run and running for this. Well, this high actually is the first stop run lower on the daily, right? So it seems like this is still open, huh? Okay, open trade. Stop at 0.5, so that's a winner. It's still open, and this has gone much higher. So we will see with this next trade leg what this provided. S2 long, now that's a 15-minute cat strength, yen weakness, 15-minute S2. Another plain vanilla, right, S2. S2 pattern within an S1 pattern, within an S1 pattern on the daily. So it's a pattern with S2 within S1 within S1. And nice momentum, right? Making a slingshot move, breaking an important stop run level, and then stopped out here at this swing low. Okay, well, let's have another one. S2 New Zealand Swiss S2 1 minute. Okay, S2 1 minute. Well, I can see this, right? 3 touches. There's quite some white space. Well, the 200 helps to protect the stop. Well, but there needs to be more to it than just the pattern, because the pattern is below average quality, right? So let's have a look. Okay, well, we have this huge big up run, big down run. Well, I want to see why that happens. Well, it could be news, but we might see what happened. Now, this is a big wick, right? So that's a rejection bar, huge rejection bar. So whenever that happens, well, the price might run in the opposite direction. That's what we see. Okay, the rejection bar came from testing the 200, right? So the bulls tried to break the 200 and they terribly failed. They failed here too. And here they tried it with force, right? And they failed. So now we've got some splendid stop run levels here, right? So that's a momentum trade, basically. You're trading the momentum coming out of that bar and shooting for those stops, right? Like everything else looks bearish, and well, that's still a fairly tight stop, especially if you think, well, if this is the pattern, well, all this is the momentum move, right? So that's basically a 6 to 1 Okay, so here's scaling in. Now it's building a now he's building a pyramid. That's the second scale in. As well here, the stop placement is on discretion, right? I mean, putting it up here would be a little bit far. So he was just deciding to put it here, right? And playing the momentum. So that's a make or break trade. We're way overextended, Well, this is trading this stop run level, right? Make or break, and it could run down to this level. Make or break. Okay, he was trailing the stop very tight, and reaping another nice winner, right? A pyramid trade of 2 positions. S1 long 5 minute. S1 long. So that's a below average TC S1 pattern, right? Well, let's see if there's more to it. Well, basically, Jamie already had a big weekly result. So let's see what happens here. Well, we're in an uptrend, right? That's the first zigzag. These are stop run levels. Okay. I'm not sure what he was thinking was. I wouldn't take this magnet, a big number, and TC2. Okay, there's a big number, right? And that's an important level. So that's basically trading to spike the big number. This is the trade, and it got there, right? So these levels are magnets, and it's kind of a nice example for that. Now let's have a look at this euro dollar S2 short 15. S2, okay, well that's a very slim S2 pattern, so that's nice. Whenever the pattern is slim, well, you can allow yourself to put the stop at the consolidation high, and it's still a tight stop, right? This is the momentum move, this is a stop. Okay, well, it's basically sitting here at the 200, right? And well, either it rejects, which is most probably, or it spikes through and goes lower. Well, here it's already sitting at the 21 as well, and this is a quick stop out. Well, it got rejected from the 200 basically, and the 21. Overextended and sitting at important resistance. As one short 1 minute, so there are a lot of 1 minute trades. Okay, again here, that's a well below quality, average quality TC pattern. So there needs to be more to it, right? Then that's basically just an excuse to get in. Well, that's taken on with high discretion. I can see it already only looking at this. Now let's see. Well, this is in an early downtrend. 200 is here, becomes a spike level, right? Stop run level. Well, here we have a micro zigzag, right? Moving average starting to cross out again. Here it's a 200. Well, here we're overextended, right? So we might that's a snapback trade, TC3 basically, and we are at a big number, and we have tested it and it failed, right? We didn't get a stop run, so it's a resistance. It fails. Well, we're overextended, so now it can actually pull back for some time again. Well, here pushing against 21, pushing against EMAS. So it's basically a snapback, right? Snapback trade to 200 and to 200 and spiking the 200. So snapback 200 and spike 200. So let's see what happened here. Well, spike 200, snapback. Well, the minimum snapback is at 21, right? And that's achieved, and that's already a nice arm multiple. So that's it. Hope that was of interest. Thank you.